Hello there and welcome to our weekly roundup for the week ending Friday the 18th of September. We hope you're enjoying the weekly reports, and please don't forget to subscribe if you wish to receive regular stock market content, and please feel free to leave any comments in the box below. We'd love to hear from you, and you're also welcome to receive our free market sector reports on tech stocks, banking and even IPOs using the link in the description below. So this week it's been all about central banks. We've heard from both the US Federal Reserve and the Bank of England. Neither bank moved on interest rates as expected. Now the Federal Reserve in fact hinted that it will be keeping interest rates at near zero until through 2023. The bank didn't seem in any rush to add additional stimulus, which upset the stock market slightly, and we saw a sell-off on the back of that. As for the Bank of England, they've warned about the upcoming headwinds that the UK economy faces, as we've got the Chancellor's job retention scheme coming to an end in October, and we've also got Brexit, which still there's no deal on the table yet, so we're heading for a hard no-deal Brexit, which again is going to be a shock to the UK economy. So on the back of that, the Bank of England is warning about the outlook. They also sort of took a step closer towards negative interest rates, which unnerved the pound, which sold off. However, across the week, the pound is actually looking okay. It's up around 1% this week against its major peers, and that's after an over 3.5% decline last week on those Brexit nerves. Brexit, there hasn't been too much movement this week. The internal markets bill did get voted through in its first reading in Parliament. That's still doing the rounds there. We're still yet to hear sort of an update on how that's going. And Brexit talks are set to start again, I do believe, next week. As far as the indices are concerned, FTSE, the DAX here in Europe, we've seen sort of 0.5% gains across the week in total. And again, the same in the US. We're looking at gains of around 0.5% across the week. Commodity-wise, oil has been very much in focus. Oil has surged around 10%, both WTI and Brent. And that's basically been on the back of a huge draw in inventories that we saw at the beginning of the week, in addition to production disruption owing to Hurricane Sally, and also the OPEC has said that it will crack down on members that are not conforming to the output cut. That's all boosted oil prices. Now, as far as single stocks are concerned, I think an outperformer this week has definitely been Ocado. Ocado are up over 20% this week. They've had a cracking week after reporting first half sales. Now, they reported that sales increased 52% across the first half. Absolutely phenomenal. And that's basically on the back of increased demand from the lockdown period and from coronavirus. And also, they updated on their joint venture with Marks and Spencer's. This is the week that we saw, last week was the week that we saw Marks and Spencer's take over will be replaced from Waitrose products on Ocado. And Ocado reported that that has gone well. Demand has been strong, which is what the market wanted to hear. So Marks and Spencer's shares also actually received a boost on the back of that. As far as other stocks that have been in focus this week, Next retailer, they also reported. Now, they upgraded their profit forecast for I do believe it's third time, definitely a second time. So they're looking at pre-tax profits of around 300 million. That's up from July's forecast of 195 million. And with Next, we've seen that they've got a sophisticated online offering which has really helped them through the coronavirus crisis, and as people are still staying away from the shops. However, they have warned that this rule of six could hit figures going forward. The rule of six that was introduced by the government as far as sort of social distancing is concerned and reduced bubbles. So that could affect Christmas sales, is what they're saying, for looking at that far. The stock is trading, it's had a solid week, it's traded over 6%. higher across the week. And the other big stock I think that was really important this week was the IPO that we saw from Hut Group. Now, Hut Group is an online retailer that's based in Manchester, and this was the largest UK IPO for around 5 years, and the company was valued at £5.4 billion. Now, they had a great debut. The IPO price was 500p, and actually surged around 30% on the day of the IPO, and that has they're now currently trading just slightly down from that 30% rise, around 577p. Definitely going to be one to watch in the future. Thanks very much for joining me. Have a great weekend.